Hello, everyone. Let's take a few minutes to talk about something that seems routine, but is really anything but the purchasing cycle. Every business buys stuff, whether it's supplies or equipment or services. That means that a lot of transactions are happening within this company in any given time period. Often these will be handled by different people across different departments, but that routine nature is exactly why the purchasing cycle can carry significant inherent risks. Remember, inherent risk is what could go wrong before we even consider internal controls. And in this cycle, there's plenty that can go wrong. I want to talk about some of those things today. Three of the big inherent risks relating to the purchasing cycle are fictitious vendors, unrecorded liabilities, and misclassification of purchases. Remember, it's our job to make sure the financial statements are not materially misstated, and these three inherent risks could end up with materially misstated financial statements. So let's look at this first one in a little bit more detail. Fictitious vendors. This one's bold, but it happens. Someone inside the company sets up a fake supplier, issues payments, and funnels money to themselves. If the vendor master file isn't monitored closely, it's easy to slip one in. So what happens here? They create a fake supplier. The employee creates a fake supplier. They submit a false invoice, maybe for goods that have never even been received. And then it's hard to catch it without these vendor controls. The next one is unrecorded liabilities. So maybe a company gets an invoice in December, but doesn't record it until January. That understated expense and liability in the prior year will overstate profits. As an auditor, this is why we look hard at January payments during a December year-end audit. And that's exactly what this picture is showing here. So the goods were received on January 28th. We didn't receive the invoice until January 5th. We paid that invoice on January 10th. So this should have been recorded as an accounts payable in December. The last one that I would like to talk about today is misclassification of purchases. So a company buys a new piece of equipment but records it as an expense instead of capitalizing it, or the reverse. An expense is capitalized to inflate their income. These misclassifications distort the financial picture and may be done intentionally. So let's look at this example. A company spends $20,000 to retool the factory equipment. Should that be recorded as a maintenance expense or a fixed asset? You decide. Not really. It should be recorded. It depends on the useful. If it's going to extend the useful life of that equipment, then it should be a fixed asset. If it's routine maintenance, then it would be a maintenance expense. Auditors need to understand the treatment of these things so they know where they should correctly be recorded. So what should auditors ask? So the purchasing cycle might seem kind of boring on the surface, but from an auditor's perspective, it's full of red flags. Your job is to stay alert, stay skeptical, and understand the risk before we even test the internal controls. So what are some things we want to know? Are vendors real and approved? We would want to look through that vendor master file and make sure that we are only submitting vendor payments to those that are on that master file, and then also verify that the ones that are on there are real. We would want to look at some cutoff testing to make sure things are recorded in the correct period, and then also making sure that they are classified correctly. Lastly, don't be fooled by routine. A lot of things happen on a routine basis in the purchasing cycle. Think about yourself. I know I get a water bill and an electric bill every single month, and they just automatically charge my account, along with Netflix and Hulu and all the other things. But that doesn't mean that these routine charges to our company accounts are not fraudulent. We want to scrutinize everything to make sure we don't have any problems.